Okay, you guys, I think we will start now. Assalamu alaikum wa rahmatullahi wa barakatuh, guys. Bismillah wa salatu wa salam ala rasulillah. Um, Thanks for everyone joining. Thank you to the attendees. It's an honor having you guys here to explain this pretty important topic here living in the West. Firstly, I'd like to actually start off with who are we? What is the Halal Wallet platform? HalalWallet.us is a financial comparison platform built specifically for Muslim consumers here in North America. It brings together Sharia compliant financial products all in one place, letting users browse, compare options across categories like home financing, investments, and many more. What sets apart is the transparency around Islamic contract models. You can see exactly what Sharia structure underlies each product before making a decision. The goal is to make halal financial decision making a lot easier, accessible, and most importantly, straightforward. And I am joined with obviously Guidance Residential. Guidance Residential has made helping Muslim Americans buy homes in a Sharia compliant way since 2002. Instead of traditional mortgage, they use a co-ownership model called Musharaka Muntakisa, where you and Guidance jointly own the property and you gradually buy out their share over time. There's no interest, there's no lender-borrower relationship, just a partnership. The program was developed with six internationally recognized Sharia scholars and 18 US law firms and is overseen as an independent Sharia and is overseen by an independent Sharia board. In 25 years, they've helped over 40,000 families across 35 states with more than $11 billion in funding. And now, moving forward, I'd like to introduce the two panelists that we have. Uh, Obviously, there's myself, alhamdulillah. My name is Hamza Iqbal. I'm a financial educator and content creator with my specific niche being Islamic finance. I like to allow Muslims here living in the West understand financial literacy through the Islamic lens in a fun, playful, and most importantly, an understanding fashion. And this is why I've actually joined Halal Wallet because I am very passionate about the uh, project that they have in mind, and I really want and have the goal, inshallah, that every single Muslim living in the West has enough literacy when it comes to Islamic finance. So moving forward, we have our two panelists from Guidance, and I'll let them introduce themselves. Firstly, we have Hussam Qutub. Hussam, if you can give a quick, brief introduction.
Yes. Hamza, assalamu alaikum everyone. My name is Hussam Qutub. I'm the Senior Vice President, National Sales Manager for Guidance Residential. I've been with Guidance since 2003. I've served in a variety of different positions with marketing, business development, outreach, engagement with the real estate agent community. People don't realize there's 2 million real estate agents in the United States, and they all need to be educated as well about what Muslims demand. And so we worked on that for many, many years, and then took over the growth of the sales division in 2020, and have been in that role since. So very, very excited to be here today.
Jazakallah. And then also we have Salman.
Hey everyone, Assalamu alaikum, Hamza. Assalamu alaikum everyone. My name is Sayyid Salman Ali. I'm a Senior Vice President at Guidance Residential. I've been with the organization for nearly 20 years, Alhamdulillah. And I've got a big passion for helping American Muslims empower themselves and their families through home ownership. And it doesn't get any better than this because this is the halal path towards home ownership. So I'm excited about tonight's event, explaining how our program works, having a QA session, engaging the audience, and helping everyone in the audience today become homeowners, inshallah.
Inshallah. Barakallah fikum. And trying to get obviously the meat of what we're going to be talking about. Obviously, we've seen these posts on Reddit, TikTok, YouTube, Muslims asking whether Islamic mortgages are actually halal, which is a big topic here living in the West. Many of us have been living here for 30 plus years, and we still kind of obviously want to ask the question. Maybe we don't understand the full context behind it. So this is why we have and need to have more discussions like this, right? These aren't fringe questions by any sorts. They're being asked everywhere, obviously by real people, by real Muslims living life and progressing in this country. And that skepticism is actually healthy, right? We're actually encouraged to ask questions when things are confusing and not to kind of obviously dive deep into just not understanding anything, right? We have to kind of understand when skepticism is there. So which is exactly why we're having this talk today. And obviously, we would like actually the panelists here to introduce or kind of bring forward the topic of why what is actually home financing? Like, what is it actually? How is it done here in the United States? And I'll let Salman actually take this on, and he can give us a brief rundown of exactly what it is.
Yeah, I appreciate that, Hamza. And this is a great place to get started. And before we talk about, how Islamic home financing works, the different models, and in particular the ownership agreement, which is the preferred model in the United States, I always find it important and necessary for everyone to understand, one, what we're trying to avoid, which is
Mm-hmm.
riba. So getting a clear understanding of riba, getting a clear understanding of the loan structure, and then going into the models. So one thing that we should have a clear understanding about is that in Islam, a loan is an act of charity. In fact, it's classified as a qarda hasana. A qarda hasana is a good loan, right? So Hamza, if I were to lend you $1,000, Islamically, I can only get back $1,000, right? And me even lending you that $1,000, yeah, it's an act of charity because I'm helping somebody in need, right? But I cannot make a profit, not even 1 cent, right? And
Mm-hmm.
if profit is made on a loan transaction or paid on a loan transaction, that's considered to be prohibited in our faith. It's a major sin. It's classified as riba. And that's what we're
Mm-hmm.
trying to owavoid. So it's important to know that premises. And then
Mm-hmm.
Hussam, maybe you could go into the common models of Islamic financing before I break down kind of how our ownership agreement structure works.
Yeah, to build on what Salman mentioned, I mean, lending money is regarded as a charitable act in Islam, and it is intended to help those who are experiencing hardship. And it is sacred because it actually protects the individual experiencing hardship from being exploited by someone who may have a lot of capital. And
Mm-hmm.
so the loan agreement is a charitable transaction, a charitable arrangement, and cannot be used for commerce, trade, investments, and such. Buying a home is an investment. So utilizing a loan arrangement is incorrect. It gives clearly it gives an opening for riba to ferment and to grow. And so really, there's a lot of wisdom in our deen, a lot of wisdom, um, and this dates back beyond Islam, of course. Before Islam, the Jews and the Christians were both warned by Allah subhanahu wa ta'ala to avoid lending money at interest.
Mm-hmm.
And it's very clear in the Old Testament and the New Testament um, because it led to things in society where those who have used the
Mm-hmm.
loan, used lending to take advantage of those who did not have. And
Mm-hmm.
ultimately, what happens when people defaulted on these loans at interest, the lender would go after their possessions.
Mm-hmm.
But that, in some days, I mean, we're talking historically, even the days during the times of Mesopotamia, you had then people go out after the individual and take possession of the individual if they didn't have possessions. So it led to slavery and it led into the trade of slaves. You're trading essentially your debt.
Mm-hmm.
This is the slippery slope of utilizing
Mm-hmm.
of riba, and the way it, as Ms. Salman mentioned, it exists or it can come about by us using the wrong contract to facilitate things like trade
Mm-hmm.
and investment. So
Mm-hmm.
Allah doesn't prohibit things without giving us options, right? So for trade, investments, and
Correct.
such, there are permissible contracts, arrangements to strike with one another. One being, as Salman mentioned, the musharaka, or you mentioned the musharaka mutanaqqisa. It's a diminishing mushar, diminishing partnership. This is the model that guidance uses. This is the model that our scholars preferred
Mm-hmm.
when they embarked on this research and development phase with the 18 law firms and really began to peel the layers and understand deeply what are the structures in America, from the taxation rules to the ownership rules of real estate and such. What would work? Would a musharaka work?
Mm-hmm.
Would an ijara work? Would a murabaha work? And they
Mm-hmm.
looked at all three. I mean, in fact, it took them 3 years to do all of this work and deduced that musharaka is the preferred, diminishing musharaka is the preferred route. Now, Let me explain to the audience what that means. So musharaka is, it's an Arabic word
Mm-hmm.
for partnership, shirka. And people don't realize, but there's different types of musharaka. There's something called shirkat al-aqd and another thing called shirkat al-milk. Shirkat al-aqd is something that we're all familiar with as sort of, partnership goes. So
Yeah.
shirkat al-aqd is a joint venture. That's what kind of partnership that is. So if you and me, Hamza, wanted to open up a coffee shop, we would essentially pool our money together. I may have 40%, you may have 60% of the funds required. Now
Mm-hmm.
we're essentially business partners, 60-40,
Mm-hmm.
and we would split all the expenses 60-40, and then we would take the income 60-40, share the
Mm-hmm.
income.
Mm-hmm.
That's a type of musharaka. It's not the musharaka utilized by us for financing homes. I mentioned a second one called shirkat al-milk. Shirkat al-milk is the type of product of model arrangement of musharaka that we utilize, and it's joint. It's not joint venture. It's joint ownership for the sole purpose of transferring ownership from one party to the next, essentially
Mm-hmm.
facilitating sole ownership of an asset. And it comes
Mm-hmm.
as a result of sort of our scholars looking deeply into the fiqh of things and recognizing that there is a structure there that can help, for example, individuals who inherit from their parents. Let's say parents die and they inherit
Mm-hmm.
a home. One of the
Mm-hmm.
one of the siblings wants to live in that home and occupy it, while the other
Mm-hmm.
wants to sell it and liquidate it and take their inheritance. And so they would work out an arrangement where they would essentially pass ownership from one to the other over a period of time. But during that
Mm-hmm.
period, one would compensate the other for using the portion of the property that they don't yet own.
Mm-hmm.
So the one sibling would get exclusive use and enjoyment of the home, but buy their sibling out. And during that time of buying their sibling out, they would also pay this utilization fee and such. So this is where it was
Mm-hmm.
adopted from the shirkat al-milk. Now, ijara, many people in the audience here will know what an ijara is. Anyone leasing an apartment or leasing a house or leasing a car is essentially in an ijara transaction. They don't have any ownership. The landlord or the owner of the asset has full ownership, and they're just lending that out for them to use at a price. And so that's an ijara contract. The challenge with the ijara here in the U.S. was from our Sharia supervisory board's perspective was it's too risky for Muslim
Mm-hmm.
consumers. You could do an ijara for it, such as a lease to own, where you could be paying to use without having any ownership, and then after a term of 10 or 15 years, you could have the option to buy it all out. Problem
Mm-hmm.
is, if the company you're engaged with goes out of business after 5 years, you've lost all those funds with zero ownership, and so that's the risk, and that's why it was not utilized. The third is murabaha, and murabaha is common in the Muslim countries,
Yeah.
but not recommended here, because murabaha means that you would buy the asset, whatever the asset is, at a set price, and then you would mark it up and resell it back to whoever. You would sell it
Mm-hmm.
to whoever needed it. For the home, a company would buy the home, let's say for 200,000, mark it up, and then sell it at installment to a home buyer who wants it. The challenge with murabaha is this. All of these, by the way, require that if you're going to do anything from a financier perspective, you have to have real ownership of that asset. So murabaha, you have to own it. So if I'm going to buy a house to resell, I will then have to have real ownership of that home, assume all risks that come with the ownership of the home during the period of transition, and then there's all kinds of things. You got to pay transfer taxes in America when you purchase a home. You have to assume an insurance policy for a period of time before I turn it back over to the buyer. There's a lot of risk involved that
Mm-hmm.
essentially, if you were trying to get around it and do this quick turnaround, sort of in a second sell it, you're actually losing the essence of what our religion teaches us, which is
Yeah.
you have to take risk. You have to take on the ownership and assume the risk, and then turn around and sell the property. Um,
Mm-hmm.
and should something arise, the
Mm-hmm.
buyer should be able to come back to you and say, "Hey,
Exactly.
there are issues." And in this case, the financing company won't allow. No financing company would do that. They would
Mm-hmm.
send the buyer back to the original seller, which then really doesn't mean that I ever actually had ownership of it, right? As an
Yes.
intermediary. And that's the challenge with murabaha here in the US. So we utilize the diminishing musharaka, the shirkat al-milk version,
Mm-hmm.
to actually have real ownership. And we'll
Mm-hmm.
talk more about that later, but I think Salman could maybe
Sure.
take a stab at the next section.
Yeah,
Exactly.
yeah, absolutely. Thank you, Hussam. And like Hamza, Hussam's mentioned, the diminishing musharaka is the preferred model of Islamic financing. And as you have it on the slide on the right-hand side for the folks to see, it's really just as basic as those three steps. It's an asset-based structure. There's a shared ownership structure, and there's
Mm-hmm.
a gradual buyout, right? And I wanted to give a real-life example of how that works in our transaction. And the first thing that I want to share is that, a lot of times folks think that this is a very complicated process. So I just want to let everybody know it's not complicated, right? It's really as simple as these three steps. The first thing to keep in mind is, again, as a reminder, we don't lend money, right? So we're not lending money. Instead, we're creating a co-ownership agreement and we're purchasing the property with you. An example, inshallah, after tonight you find your dream home and you want to put down 3%, we'll put down the remaining 97% and we'll purchase the property together as co-owners in the property. And the ownership in the property is determined by each party's down payment. So initially, in the example that we just talked about, you're going to be a 3% owner of the property in the onset, and we're going to be a 97% owner. And what makes it interesting is you make a monthly payment to guide us, and part of the payment is a utility fee for using our share of the home, and the rest
Mm-hmm.
is the payment to increase your ownership in the property, right? So as a result, what happens as you make your monthly payments, guidance's ownership decreases while your ownership increases, and you eventually buy us out entirely and become 100% owner of the property. And what really makes this unique and unlike any other organization is that we're a fully independent organization, disassociated from any conventional banks or banking activities, meaning we're not even a subsidiary of a bank. And as a
Mm-hmm.
result, we share in the loss in case of natural disaster, eminent domain, foreclosure, and best of all, our program has been approved by 7 of the world's most leading scholars in the field of Islamic financing.
Mm-hmm. MashaAllah, Allahumma barik.
Yeah.
And everyone loves to hear this side of it. However, there are a lot of questions that people also have, which is the fun part. This is exactly the skepticism that's needed because with this comes real honesty, right? So I think we have a huge list of questions that not huge but good enough where these are the main talking points that people have or rebuttals. And I think we'll move forward with that. And here are the kind of the questions, the top five that we kind of came up with, put together to address these things. And I think we'll go tackle them one by one. And I'll essentially just read out the question, and Salman and Sam, you guys know which one you guys want to answer, and inshallah we'll take it from there. So, question number one is this just interest with a different name? The biggest hot topic question. Every uncle and auntie wanted to say that out loud without knowing exactly what's happening. So please address the audience.
Um, no, the answer is absolutely not. This is substantively a different arrangement. The contract that our customers sign is called the co-ownership agreement. In every other mortgage in the United States, if you are going to take out a mortgage that has interest, conventional mortgages, they all use a contract called the lender agreement. It's boilerplate. They don't really change it a whole lot. It's the same contract. And it characterizes you as the borrower of funds. It characterizes the financier, the bank, as a lender of those funds. And your obligation is to repay the debt at interest. with guidance, you're signing a co-ownership commitment agreement where you're actually inviting guidance to co-own the property with you as your co-owner, and your obligation is to buy us out over a period of time, a term that you choose. This is all detailed out in the contract,
Mm-hmm.
and what you're paying, your monthly payments essentially are made up of are the acquisition amount. So you're acquiring our shares each month.
Mm-hmm.
And the second portion of your monthly payment is the utilization fee, the
Mm-hmm.
charge that we charge you to use the portion of the property we don't yet own. Salman just mentioned we can come in at 97% co-owners and you at 3%. So 3% down payment is the minimum that you can bring. Well, if we actually own 97% of the property, which we do, we actually take on an LLC to create ownership for our portion of the property. So that LLC represents, for example, in day one is 97% of ownership. We're going to allow you to use the entire property, including ours, but we're going to charge you for using our share. And so that's the difference. And that's halal, to charge
Mm-hmm.
somebody to use something that
So,
you actually have ownership of.
mm-hmm.
That's the substantive difference in the contractual arrangement with guidance versus conventional mortgages. That's the
Mm-hmm.
key point there.
And Hussam, just a kind of a follow-up, a minor question here, just to kind of piggyback off this one. Is the terminology interest in English used in any of these contracts? And can you address the difference between this and actual riba?
Yeah, so interest in conventional term here is really it's usury. That's really what it is. It's plain and simple. They changed the word in the 14th century from usury to interest to make it halal, or the European monarchs did this to skirt the issue of usury. But it's basically repaying a loan, repaying the principal and the addition on that principal on the loan. So that's what interest essentially represents, where in our contract, you're not borrowing a dime, you're not borrowing a penny.
Mm-hmm.
Your money is tied up into the property, our money is tied up into the property. That's the arrangement and how it's structured. And what you're paying us to use, or paying us as a profit to us, is essentially the usage of the portion of the property you don't yet own. Now I will say this, Hamza, this is important for the audience, right?
So,
There
yeah.
are consumer protections in place in the United States
Mm-hmm.
where organizations like us, all organizations in the home financing realm, must provide customers with disclosures, government mandated disclosures. They're actually government drafted and mandated disclosures. Now, those disclosures are provided as sort of a a letter in form of different ways at different stages of the process. They use terminology like interest to describe what we're offering.
Yes.
Unfortunately, we tried to get those documents, those federally mandated documents, to characterize our structure and characterize our arrangement more accurately. But the
Mm-hmm.
response we received from government authorities is, once you reach millions of people, then we can maybe talk about customizing these things, but otherwise you need to use them as is. The Sharia board ruled on this. It's very
Mm-hmm.
simple. These government disclosures are not contractual. They're not part of the contract. They don't constitute the arrangement between the two parties. They're simply FYIs, if you want to call it that.
Yeah.
And so they may be using terminology that doesn't properly characterize this, but it doesn't negate the authenticity and the permissibility of the contract as it's structured. So, and we even have a fatwa that describes that for our audience to help them understand that it's really not in our power for these
Mm-hmm.
disclosures to say what we believe they should be saying.
Barakallahu fikum. And I think that really nailed it. Inshallah, so we'll go with the next question is if payments track market rates, what is actually different?
That's a really, really good question, and we get that quite often, Hamza. And the key thing over here is for the purposes of being competitive, we do benchmark our pricing with the conventional market. In fact, we have a dedicated pricing department that on a regular daily basis is looking at the market, because our goal is to be transparent with our clients and customers, is to be fair with them. And we also want to be fair to our investors as well, right? So this is why we benchmark with the conventional market. So often, like some of our customers might say, well, your prices are really just the same as a conventional bank, right? And just as the question that you posed, Hamza, is it actually different? And the
Mm-hmm.
answer to that is yes, right? Just because two things can cost the same doesn't mean they are the same, right? Like if chicken and pork cost the same, the chicken doesn't become the pork and the pork doesn't become the chicken, right?
Yeah. Yes.
So, but it's for the purposes of being competitive. And one thing that I can add is, Alhamdulillah, our pricing is very competitive. I would say, especially as Muslim Americans in the United
Mm-hmm.
States, it's never been easier as Muslims to purchase a property in America the halal way without
Mm-hmm.
having to compromise our faith and our values and our
Mm-hmm.
finances for that matter. Because as I mentioned, after nearly 25 years of doing business, we've grown, we've become very, very competitive, not
Mm-hmm.
just in the profit rates that we offer, but also our closing costs. In
Mm-hmm.
fact, being in the industry for over 20 years, when I see a lot of, competitor estimates, our costs are generally lower than everybody else. So very
Mm-hmm.
much in line and sometimes better than the market. So that's something we're really proud of, that we can,
Mm-hmm.
offer this type of a product that's affordable to our community.
Barakallahu feekum. Jazakumullah. The next question is short but sweet. Who really bears the risk?
Yeah, that's a great question. So in a conventional mortgage, the risk is always shifted onto the borrowers of money. That's just the way it works. It's like
Mm-hmm.
Vegas. The house always wins. The banks always win because of the arrangement they struck with you, which is a ribawi arrangement. It's a loan. You're borrowing their funds, and now you're at a disadvantage, and all the risk is on your shoulders. Um, our structure, Islamic financial structures, two things are very important. The cornerstone of Islamic finance is really two things. It's ownership. The financier must take on ownership. And I liken
Mm-hmm.
that to sort of having skin in the game, Hamza. So,
Mm-hmm.
so
Yes.
you must have skin in the game to do number two, which is share in the risk. And so we're the only organization, Islamic or otherwise, that actually shares in the loss in the event proceeds from insurance to cover, let's say, the house catching fire, the house being completely destroyed by natural disasters, including fire, including hurricanes, flooding. If the proceeds from the insurance company, if there's a shortfall in those proceeds, if they don't cover the full cost of the house to repair or rebuild, we actually share in those shortfall proceeds equal to our ownership at that stage. Conventional mortgages, and I will say this, dare I say this, other Islamic institutions, they actually make sure that the loan is fulfilled first. So if it's a $100,000 property, and let's say the customer has a $10,000, the customer has a $90,000 loan on this $100,000 property, then the bank or the financial institution will take the proceeds. If the proceeds happen to be $80,000 from the insurance company, and insurance companies have been known recently to pay out less and less, then the bank takes that 80 to offset the $90,000. Now there's a shortfall. They'll come
Mm-hmm.
after you after that shortfall because they loaned you the money. They want their loan
Mm-hmm.
back.
Mm-hmm.
With our program, we would take the 80,000 and divide it according to our ownership stake, 90-10, if it's at 90-10 at that time,
Mm-hmm.
sharing equally in the loss in that event. This is something that does not exist in the US mortgage industry whatsoever. And when the media, various publications and broadcast media learned about this, this is how we received a tremendous amount of interest in our program in Islamic finance. People began to ask questions. Why isn't
Mm-hmm.
everything else like this? It's only fair. It's consumer friendly. So we bear risk. Absolutely, we do take on more risk than your average financial institution, and
Mm-hmm.
And that is the true test. Now, also, there's another thing called recourse in America. If you default, this is not a natural disaster. Now, the trigger event is you defaulting. If you default, most states allow the bank not only to take the house, but to actually come after you if they sell it at a loss. So they'll come after you for the
Mm,
difference.
hmm.
There's only a few states that actually prohibit recourse.
Some
Um,
on that note, I do want to just quickly add that unfortunately, conventional banks do profit from default, right?
oh yeah,
They almost
Yeah.
want you to go into default because they're structured that way, where they, just like Hussam mentioned, they have recourse. They can come after not just that property,
right.
but other assets. And that's big, right? And that's a system that, we definitely don't want to be a part of. Obviously,
Yeah.
it's un-Islamic.
Sure.
Alhamdulillah, our program is very different. And also one other thing to add on the topic of default is, God forbid, if any of our customers are going through any type of a hardship, whether they lost their job or there's a medical reason. We've always had a hardship department that reviews these cases case by case and then determines a solution. In some cases, we reduce the profit for our customers to make it easy for them to stay in the property. In some instances, I remember we gave them a grace period of 6 months to get back on their feet. So our goal
Hmm.
as a co-owner is not default. It's for them to continue making payments in a comfortable manner.
That's right. Hamza, you might be too young to remember the mortgage crisis or the financial crisis that occurred in 2007,
Yes.
2008. There was a record number of defaults and deficiency
Yes.
judgments issued against borrowers who literally walked into their banks and turned in the keys to the house because they couldn't
Hmm.
sell it. It was underwater, and they knew they
Hmm.
owed more than the sale price. So they literally handed the keys to the bank. What did the bank do? The banks came after them in a manner where they issued deficiency judgments through the courts. This is a year, 2 years later, after people went off and maybe rebuilt their lives, they would receive a deficiency judgment by a sheriff delivered to their home saying, you still owe $50,000 from the loan from 3 years ago. From the sale of the house, the proceeds did not meet up the loan amount you took, plus the accruing interest over those last
Hmm.
2 years. You still owe
Hmm.
this, and we will come and essentially repossess anything you may own today to make the bank whole. That's recourse.
Hmm.
And there were more deficiency judgments during those years than since the Great Depression in this country. And so we have a non-recourse clause in every single contract, regardless of what the state says about the topic. That's an important distinction.
Jazakumullah khairan. Actually, just another, I think, a question that we were getting also is like, how about ownership when it comes to, or risk when it comes to taxes, like property taxes, land transfer? Can you talk a bit more about that shortly before we move on to the next question?
Sure. So property taxes. We look at property taxes in a way that says, okay, what do they go towards? In the U.S., property taxes pay for the local authorities, the fire department. They pay
Hmm.
for the public schools, the paving of roads, the public libraries, and so on and so forth. The beneficiary of all of those services is the occupant of the property, not guidance.
Yes.
And if all of those things work well, the property value increases. Who benefits from any dollar appreciation in the property value? Remember, this is a shirkat al-milk. It's not a shirkat al-aqid. So
Sure.
beneficiary is solely the customer. So the customer will benefit from the full appreciating value of the property. So then the decision by the Sharia board was very straightforward and simple. It said property taxes are the sole responsibility of the occupant because they benefit from the services provided from those funds and the total appreciation value of the property.
Amazing. That actually answered it pretty nicely. Barakallahu feekum. And then next question is ownership real or symbolic?
Yeah, that's a really good question. The ownership is very, very real for a couple different reasons. One is that it's the premises of the contract, right? If we go back to our original discussion, we're comparing a loan transaction to a co-ownership agreement, right? So in a co-ownership agreement, we actually create a real partnership. And this is something that actually is very unique with guidance because it is in fact a true co-ownership. We create an LLC, a limited liability company, to legitimize that. It's a Sharia requirement, alhamdulillah.
Hmm.
And an interesting fact, Hamza, you may or you may not know this, but guidance is the only institution in the United States that actually creates an LLC to legitimize this true co-ownership agreement. So it is in fact a true ownership. It's not symbolic whatsoever. And as a result, everything that we just discussed in the previous question regarding the risk bears factor because that's why we share in the risk in case of natural disaster, eminent domain foreclosure is because we do truly have a co-ownership stake in the property. It isn't a lender and borrower relationship, and there's equity between the two of us.
Barakallahu feek. Essentially, there's another question that kind of carries on with this one is let me just read this one more time. Who holds the deed, essentially, when it comes to this?
So there's two things. There's the title and there's the deed, right?
Yes.
And so the title is what um, the um, the local jurisdictions use, for example, in the cases where they want to provide tax rebates to property on property taxes and such. This has happened to us, and so we used to go on the title, and we took ourselves off the title. Because we became essentially a burden on the customer because the customer, I just finished
Hmm.
saying, pays the property taxes, right? So if there's any kind of rebate that goes back out, it should all go back out to the occupant of the property. The
Hmm.
deed, the deed is the customer's because ultimately we're going to be on the deed as the LLC, but we're both co-owners. So we both have a right to the property. We've given our right to the customer to utilize it fully, exclusively.
Hmm. Hmm.
But it doesn't mean we don't also co-own the property. We still co-own the property. So in that sense, until the customer fully acquires our share, and we no longer become a co-owner, we then go off the deed. We then are the co-ownership agreement is actually dissolved.
Hmm.
So it's pretty straightforward in that sense. And so wanted to kind of describe part of it because you can't talk about the deed without talking about the title.
Exactly, yeah. Amazing. Jazakumullah. Also, to kind of tie this all together, is this genuine compliance or convenient justification? This is kind of what a lot of Muslim Americans kind of struggle with grasping. Maybe some people say it's too good to be true, or some people just don't want to see this happening. So,
This is a good question. Look, um, you know, when we embarked on this, the R&D project that cost us millions of dollars between 1999 and 2002, this was a major, major undertaking, the likes of
hmm.
which Islamic finance has not seen since. When you bring together six of the world's leading Islamic financial transaction scholars, led by the world's most respected and renowned scholar in this field, Mufti Muhammad Taqi Usmani, who happens to be the chairman of IOFI, the Accounting and Auditing Organization for Islamic
Yes.
Financial Institutions. This is the governing body of Islamic finance on a global level. He is the chairman of their Sharia Supervisory Board, so you can imagine. So we brought him and five other scholars simply to help us develop a program that allows Muslims to buy homes through a financial arrangement
Hmm.
that is within the confines of Sharia. So what they learned after they started peeling the layers, and there's many layers that they had to peel and look into about US housing finance laws, regulations, federal, state regulations, taxation laws. The board and the law firms employed to do all of this work diligently, and they ruled out several things, right? As I mentioned earlier, before they landed on this structure. This is a
Hmm.
genuine structure. This structure has been adopted globally, in fact. And it's not convenient justification. It's legitimate co-ownership, legitimate arrangements around Sharia where there's real ownership by the financier, where there's real risk sharing involved. And all of the
Hmm.
aspects I mentioned and more, there's more we haven't even talked about, have all been scrutinized to a degree, Hamza, that I don't think your audience or anybody would ever, be able to really truly appreciate. Um,
Hmm.
but the scrutiny that we went under over those 3 years just to produce the program and the fatwas that came with the program, um, if it was just convenient justification, I think we could have done it in a span of 6 months and,
Yeah.
and hired one lawyer. But that is something that really needs to be looked at by many people who are looking at options right today, is
Hmm.
what level of detail, who are the scholars,
Hmm.
and what is their credentials? Because there are many scholars we have, and we respect many scholars, but ultimately, it's almost like when you look at doctors, right?
Yeah.
I look at it this way, right? You're not going to go to your general practitioner to talk about potentially putting a valve in your heart. You're going to go to a cardiologist. And then you're going to look at the number of cardiologists out there. Are you just going to pick one randomly? Or are you going to, it's your heart. So you're going to probably look to see who is the most respected and renowned heart surgeon in your area to lead you to the conclusion that, okay, you're in good hands. And that's what we did essentially
Hmm.
with
Hmm.
our Sharia supervisor. Alhamdulillah, we were very fortunate that they were all available to dedicate the time and effort to this project and to our
Hmm.
program. And today, still, auditing us once a year to ensure authenticity.
Allah Mabarak. We love to see that. We love to see the transparency, and this is why we need to have more calls like this. And this is kind of a general question, kind of for the people who are actually watching this, and inshallah, when they'll see the recording, is what did they actually choose? You kind of touched on this with them, but what should they look for, generally when they kind of want to go purchase homes?
Yeah, I did just talk about the Sharia board. I think
Yeah.
I covered this. It is important. This is important. IOFI actually publishes standards for Islamic
Yes.
financial institutions and for central banks to even to follow. And one of the requirements is for an Islamic financial institution to have a board, a Sharia supervisory board of respected and renowned scholars in the
Hmm.
in the space. Like I mentioned, the cardiologist or the
Hmm.
leading cardiologist, if available.
Hmm.
In the U.S., we had to go with the leading scholars because in the U.S. it's very complex. The financial industry is a highly complex industry. So one of the things you should look for is who is on the board. Do they have a board? And how many
Hmm.
scholars? Is it a diversified board? Is there just two, three scholars, or is there five, six scholars? And that speaks to essentially the amount of rigor and work that was done. Because let's be honest, we're all human beings, even our scholars.
Yes.
And when you're looking at layers and layers and layers of financial complexity with the regulations and rules in the rule book here in America, you can miss something if it's just one scholar. You can miss
Yes.
something if it's just two scholars. And if you haven't had the discipline and the work over decades in this space, you very well will miss something. So
Hmm.
having that kind of diversity to the board, and the scholars being reputable, long-standing scholars with decades of experience, I think that goes a long way for giving you the peace of mind you need to make this conscious choice.
So, amazing explanation. I think we've also kind of touched on this. I think everyone understands the partnership agreement that Guidance has, Shirkat al-Milk. I think we may just have to skip over this unless you want to maybe just put a bow together and make it understood one more time by the for the people of exactly how Guidance works.
Well, so I don't know, Salman, if you wanted to kind of uh, 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 summarize, I think we did cover quite a bit.
Yeah, we did, yes.
Yeah, but I'm happy to. It's a great,
Amazing.
yeah, it's a great reminder. And sometimes, like the first time you hear it, it's a lot to take in. But again, remember, it's very simple. The first thing to
Hmm.
keep in mind is that we don't lend money, right? So there
Hmm.
is absolutely no loan in this transaction. And instead, we create a co-ownership agreement and we purchase the property with you. And it's important to note that we're both co-owners in the property. you're the occupying co-owner and we're the non-occupying co-owner, right? And then I gave an example earlier, and I use an example of 3% down because that's our minimum down payment requirement. So let's say you put down a minimum of 3%, you find your dream home, inshallah. We'll put down the remainder of 97%, and we'll purchase the property together again as co-owners and not as a lender and borrower, right? Co-owners. And the ownership of the property initially is determined by each party's down payment. And then what happens is as you make your monthly payments to guidance, part of the payment is a utility fee for using our share of the home, and the rest
Mm-hmm.
is a payment to increase your ownership in the property, because that's the eventual goal, right? Is to buy us out.
Mm-hmm.
And it's magical because as you make your monthly payments, guidance's ownership is decreasing. So that 97% we
Mm-hmm.
talked about every month goes down, and your ownership at the same time is increasing until you eventually become 100% owner of the property and entirely buy us out. And we talked about what makes guidance unique and unlike any other organization. We're a fully independent organization. We're
Mm-hmm.
disassociated from any banking activities. That means that we're not even a subsidiary of a conventional bank. That makes us very, very unique. Another fun fact, we're actually the only Muslim-owned organization in the country that offers Islamic financing at this level. And as a
Mm-hmm.
result, we talked about this. We share in the loss in case of natural disaster, eminent domain, foreclosure, and we just talked about, being approved by 7 of the leading scholars in the field of Islamic financing.
Allahumma barik. Just an FYI to the audience, we did talk about riba, and I actually wanted to bring this point again. If you want to dive deeper into what riba is, Mufti Taqi Osmani has a book called The Introduction to Islamic Finance, and it's available online if you guys want to dive deeper into that. But I think this is general Q&A. We'll try to keep this short. However, feel free to explain further if there's some points that may need more elaboration. So we'll kind of start off with the biggest kind of, I guess, elephant in the room is, does guidance sell loans? Freddie Mac and May style. Can you guys speak on about can you guys speak more about the how does that kind of work, and where do misconceptions come from?
Great question. All right. So first you said something, Hamza, or I think our questioner said, does guidance sell loans? First of all, we don't generate loans. There are no
Yeah,
loans.
exactly.
There are co-ownership commitment agreements that you sign with us, characterizing you as a co-owner with us. We're the co-owner with you and the property. And secondly, I think this is referring to the secondary market, the securitization mechanism we have through Freddie Mac and Fannie Mae. We did reach out to Freddie Mac and Fannie Mae during the R&D process. We wanted to work with them. Here's why. Freddie Mac and Fannie Mae are misunderstood many times. People think they loan money. People think they're banks. They're neither. They're not banks. They don't lend. They're actually prohibited from lending money. They're aggregators that were developed by Congress in the 60s to create liquidity in the US housing market. Their sole purpose was to create a platform where they could invite institutional investors to invest in US mortgages, because there wasn't enough capital in the US to support the need for financing. So what they do is they actually aggregate mortgages that meet their criteria. So they set their criteria, and the people who are or the companies that are in the mortgage industry have to meet those criterias. And they're simple criteria. It's like, hey, if you want to finance somebody for a house, they need to have a credit score of 620 or higher. They need to have this much assets. They need to have a debt to income ratio of X and Y. So those are simple guidelines, and they're there to make sure they're protecting the investors, whoever will invest in these mortgages. So then what they do is they buy these mortgages, and then they issue them on the secondary market as U.S. mortgage-backed securities. When they issue them as securities, investors invest, institutional investors. And who are they? A pension fund manager. So let's take maybe the Germany's or Japan's Teachers Union Pension Fund is managed by a pension fund manager. Typically, pension fund managers will purchase, because they need to manage that pension. So when teachers retire, for example, they have a pension that pays them. So they need to invest those dollars, and they typically invest 30% of the pension fund into U.S. mortgage-backed securities because they're very stable. And so we wanted a gateway. We wanted to get to those institutional investors to attract them to invest in our musharaka mutanaqisa structures. They have returns, right? There's a return to be made. The returns are utilization fees that our customers pay for using our portion of the property. And so we went to them saying, we would like for you to help us securitize our musharakas. They ultimately agreed. And so this securitization mechanism is halal. It's typically referred to in Arabic as a sukuk. So we have the tradition of allowing investors to invest into it's like a stock that you're investing in. But here's the difference. The LLC is always under our name. It's our LLC and it's our co-ownership commitment agreement with the customer. So we always have the relationship with the customer, regardless of the silent investors investing. And so what is important to note is you'll never deal with Freddie Mac, Fannie Mae, or any of the investors investing into the musharakas. You'll always deal with guidance. And then something I'd like to mention very quickly, we recently launched in December Guidance Investments. And it launched a trust, a Islamic real estate investment trust. That trust now allows consumers like you and I to invest in the musharakas like institutional investors do through Freddie Mac and Fannie Mae. So the arrangement is a buy-sell arrangement. It's not a lender-borrower from A to Z. And for us, it's just a matter of educating people on what is Freddie Mac and Fannie Mae, as I just did.
So the education piece, that's, I guess, the lack of it, that's the most apparent. Just one final question, guys. We are running short on time, and we'll just answer this one question. Just an FYI to everyone that questions will be later addressed on email. And then also this recording will also be published and sent to you guys all later. Just one last question. Does guidance only do homes and any expansion to other states planned?
So that's a good question. So our specialty is residential financing. So home financing, we're operational in over 35 states. And one of the questions, a natural question that the audience might be thinking right now, and I think this is a good final response, is what next, right? I'm interested, what should be my first step? So when you make your intention to purchase a property, the first step is getting a pre-approval. A pre-approval is very easy to do. You can do so on our website, guidanceresidential.com. You can start that pre-approval started. You connect with a local account executive. And I want you to also know a pre-approval doesn't cost you anything. So there's no cost involved. There's a soft credit check, which means you're going to have no negative impact on your credit score or your credit history. So you really have nothing to lose, but you have everything to gain because through a pre-approval process, you get to understand what's your purchase budget. Are you able to buy a house for $1 million or 500,000 or somewhere in between? So you get a good understanding of that. It narrows down your search and you get a good understanding of what your monthly payment and closing costs may look like, making you an educated buyer. So I encourage everyone to go to guidanceresidential.com and start your pre-approval process tonight.
Amazing, Salman. Jazakumullah khair. Barakallah fikum. It was an amazing session that we had. A lot of education from me personally that took place, and I'm sure a lot of the questions were answered for everyone that had them. So we'd like to end off the session. Obviously, you can find Halal Wallet at halalwallet.us. We are a comparison tool to allow Americans and Muslims here in North America to decide and understand what the Sharia models are for a lot of these financial products. And obviously, please visit guidanceresidential.com. And I'm sure you guys have some sort of Q&A or you guys can call. You guys obviously let the audience know how we can get in contact with you or a rep from you guys from your side. And I think we'll just end it from there. Yeah.
Well, going to guidanceresidential.com is the first step. Yes. And on that site, I think as Salman mentioned, you have options. You can learn as much as you want. We have unlimited amounts of videos, motion graphics, all kinds of educational resources are available on that website. The other option is to call us. If you want to speak to someone, you can call our toll-free 866 guidance number. And then the other option is to start a pre-approval process online through a PQ. So you click on a button that says, hey, I want to be pre-qualified. You will fill out that form. You will receive a call and someone will walk you through the entire process seamlessly. We've made it all pretty straightforward, seamless, and transparent. And it's really been a hallmark of our organization, and that is educate, be transparent, help everybody see the entire picture, understand the why behind everything, and have barakah in your life, especially the biggest purchase you'll ever make, which is a home.
For sure. For sure. Okay, and that's a wrap, guys. I hope you guys enjoyed it. So just another reminder for everyone here that your questions were not intentionally unanswered. There were just so many of them. Inshallah, we'll try to catch and respond to as many of them via email. And this is our final send off. Assalamu alaikum wa rahmatullah. And may the decision in the future for a home purchase be ever more so easier. So, assalamu
Ameen.
alaikum.
Thank you.
Wa alaikum assalam.
Alaikum salam.
Assalamu alaikum.
Assalamu alaikum.